Time to get started. Hello, everybody. My name is Russell Katz. I'm the Investor Relations Account Manager with for AdAlta. This has been a long time coming. I know that the last webinar we had, people were very curious about funding going forward. As you can now see, we had reasons for not being able to discuss it. Very good ones, I might add. And so the way that this will work is like most of our webinars. Tim will give the presentation, and then we'll have time for questions. If you have any questions, please put them in the Q&A section at the bottom of your screen. If you think of a question after the fact, please remember that you can always go to our Investor Hub, which you can access via our website or our ASX announcements, and you can post a question directly on whatever announcement or update post you have an interest in. So without further ado, I'm going to turn it over to Tim, who's going to talk about the exciting results from this critical funding.
Thank you, Russell, and thanks for joining me today, everybody. It's a great pleasure to be able to talk to you today about our new institutional investment that provides us with the ability to pursue multiple of our growth initiatives in parallel. So before I begin, let me put the strategic framework in place again, remind everyone of what we're actually trying to do with the AdAlta business. We have three core strategies that we've been working on consistently for the last 12 months or more. The first is to realize the value of our lead asset, AD214. The second is to progress our internal iBody-enabled immunotherapy programs in the field of CAR T-cell therapy and PET imaging. And the third is to recognize that we need to continue to invest in our iBody platform and pipeline, recognizing that value inflection for our shareholders comes when we take assets through clinical milestones. And therefore, to enhance the pipeline through clinic-ready assets is a really important part of our strategic priorities. We're progressing all of these in parallel. As I will describe in short order, we are continuing to progress our partnering strategies for AD214 to finance the phase 2 program. Those conversations with both out-licensing and co-investment collaborators are progressing satisfactorily. The second part of our program is very much our business as usual, but we are keen to commence work on two new iBody-enabled CAR T discovery programs. And in the area of our platform, we've recently announced our collaboration with Synthesis Bioventures that enables us to address and move forward our cellular immunotherapy strategy through a subsidiary to be called AdCella. Our AD214 development program is set out on this page, remembering that last quarter we announced exciting results from our phase 1 extension study that essentially provided us with the full data package required to advance AD214 into phase 2, demonstrating the safety, tolerability, and expected pharmacokinetic and dynamic properties of the molecule, and addressing the key questions that pharma companies have been asking us, really the clinical performance of this asset to date. That enabled us to then progress those conversations to finance phase 2, either through co-development in an asset-specific entity, similar to AdCella, if you like, and we are advancing a number of conversations with both financial and strategic investors to enable us to finance the phase 2 there, and we continue to progress out-licensing conversations with larger biopharmaceutical companies who would take over the overall development. The objective here, of course, is to take AD214 not just through phase 2 studies with the intravenous product, but also to develop a enhanced next generation subcutaneous product that would reduce the cost of goods and enhance market share through a more convenient patient self-administration route of administration. The iBody discovery program is very much business as usual, so I won't talk too much about that second pillar of our strategy. The third pillar of the strategy is the AdCella cellular immunotherapy program, where we announced very recently a very clear focus and strategy for that, which is very much about bringing Asian innovation in the field of cellular immunotherapy into Western regulated markets via Australia. And in doing so, we're harnessing some very, very significant strategic assets and capabilities that are, we believe, unique to AdAlta. These include the enormous innovation that is happening in the cellular immunotherapy field in Asia, particularly in China, but also in South Korea, Japan, and Australia. That is in our time zone and much easier to transact with than the other side of the world. We have a world-class cell therapies, clinical trial and translational research capability, and a world-class and experienced GMP manufacturing and supply chain in Australia. And we can conduct cellular immunotherapy trials for 25 to 50% lower cost than we can in the US. And that's before we add the benefits of the R&D tax incentive. AdAlta's iBody capability provides additional benefits to our partners by providing the smallest building blocks for the other parts of their pipeline and future products in their pipelines. And our collaboration with Synthesis brings together additional capabilities in doing business in China in particular, cross-border transactions, and also venture capital like disciplines in product selection, drug development, and access to additional capital. The business model for AdAlta is very simple, articulated on this slide. We will in-license market-leading assets based on cellular immunotherapies for solid cancers. From Asia, we'll establish a Western regulated manufacturing and supply chain in Australia with the objective of then obtaining first Western regulated clinical data in Australia with all those cost and translational benefits I just described. Not only does the additional clinical data add value, the fact that we have now established a fully Western regulated and GMP compliant supply chain and extracted those assets into a form that they can easily be transacted with US in particular and European companies adds significant value to what can be achieved by our partners on their own. Once we've done this, we will partner with other manufacturing locations around the world and on-license the products for further commercialization by larger companies, very much as we're doing with AD214. And in this way, we can rapidly build a clinical stage pipeline and significantly enhance the value of AdAlta. So that brings me on to the financing. This new investment provides us with the ability to progress all of those strategies in parallel rather than having to sequence them. In an ideal world, of course, then we use one strategy to finance the others. That doesn't always work ideally, and we feared we would miss out on opportunities in the cellular immunotherapy space if we didn't have access to additional capital. So we've partnered with New Life Sciences Capital, which is a US-based healthcare-focused institutional fund, and the Muirs Group, which is one of our largest existing and one of our longest-standing shareholders, to design a flexible financing facility that provides us with access of up to $3.7 million over the course of the next 12 months in order to progress these strategies. The first 1.2 million will be received this month in May. The second investment comprises up to 1.7 million. 1 million of that could be received within the next 6 months and is at AdAlta's option. The remaining 0.7 million of that is receivable in the next 12 months with New Life Sciences Capital's consent. And then the final $800,000 could be available within the next 12 months by mutual agreement between the parties. The other terms of the agreement are very much industry standard for this type of facility. But before I go on to those in detail, just a reminder that the benefits of this particular style of investment in AdAlta are significant. We'll use the funds to accelerate the progress of our cellular immunotherapy collaboration with Synthesis Bioventures and to progress our internal iBody programs. This provides us the certainty of being able to progress those growth initiatives independent of the availability of funds from ongoing partner initiatives for AD214, of which we remain confident in. The facility is flexible, so we only need to draw down the funds as required, and we can repay the investment rather than issue shares if the cash becomes available from other sources. This minimizes potential dilution for shareholders. And finally, the terms are competitive against other options that we looked at. The issue price of the shares will be determined by AdAlta share price at the time of issue over the next 3 years, not at the share price today, which would have been the case with a conventional placement. The investment is protected by floor price provisions, and the pricing and the fees compare very favourably with the sort of discounted placements that are seem to be routine today, and this doesn't come with any options coverage either, so further protects from dilution and low-priced issuances in the future. The detailed terms are set out here and can be further seen in the ASX announcements. Essentially, in return for the investment that we are receiving, AdAlta will issue placement shares worth 109% of those investments over the next 36 months, as requested by New Life Sciences Capital and in the Mules investment, the Mules Group. The initial purchase price is 6 cents, which is a premium to our current share price. That will reset to 90% of the VWAP in the preceding period, subject to the floor price of 2 cents. And we have the right to repay this facility in cash in total on the first investment within 120 days, and for any subscription amount at the market value of the shares that would have been issued. The Mules investment will be essentially on the same terms, except as for the total investment and the number of investments that they will make. So that leaves us with a very much stronger foundation in place for growth. When I last spoke to shareholders in a webinar such as this, we had our AD214 strategy. We'd announced the East-West Cellular Immunotherapy strategy with Synthesis Bioventures. The question remained, how do we progress all of those in parallel? We have answered that question with the financing facility we've now put in place. So that leaves us with multiple strategies to add value to shareholders, all of which have transaction opportunities in the near term, all of which have significant value creation opportunities in the near term. We have an experienced team, and more importantly, building an experienced network to assist us, as exemplified by the Synthesis collaboration. We have a strong and supportive institutional and large shareholder register, as is exemplified by the Mules Group participating in this round. And we continue to believe that our valuation is attractive compared to the commercial value of the pipeline. So we're super excited that we're now in a position, not just with these strategies on paper and opportunities in front of us, but with the runway and the capital to enable us to progress those initiatives in parallel in the near term. And so with that, Russell, I will stop and address any of the questions that might have come from our audience.
Thank you, Tim. Yes, we have quite a few questions so far. I'm just going to wait just a few seconds. If anybody has any questions, just remember to please put them in the Q&A. The other thing that I did want to mention is, as you could see from the presentation, it was quite detailed and it really explained it quite nicely. So just be advised that was released to the ASX this morning and can be found on our website as well. So the recording of this webinar will also be on our Investor Hub today. So with that said, we're just going to jump into the questions that we have so far. The first question we have was, can you please provide some additional detail on the dilution to shareholders comparatively to if it was just a pure equity raise?
So as I outlined, we have three strategies that AdAlta is working on. Or generating return on AD214, which has the potential to provide varying levels of non-dilutive capital to AdAlta, depending on whether it becomes a straight-out license or a co-development program. We then have to continue aim to continue our internal programs, and we want to expand and accelerate our collaboration with Synthesis Bioventures. So in order to do all of that in parallel, we needed obviously to raise some additional funds. If we were to rely solely on non-dilutive financing from AD214, we would have ended up having to defer or delay some of those other programs, which obviously cost value over time. The benefit of this facility is that we raise and utilize only the funds that we need, rather than having to potentially do a larger raise at today's prices to give us the certainty of a much longer runway and then lock in a level of dilution for existing shareholders. So the flexibility of this facility means, in our view, that we only raise the money we need. It gives us the opportunity to accelerate and continue the momentum on all of our strategic platforms rather than having to pause opportunities just as we're gaining momentum in them. But at the same time, maximizes our ability to leverage any future non-dilutive capital that may come from 8214 transactions.
Thank you, Tim. And just a real quick follow-up question that was directly related. We also had a few questions asking specifically on the runway. I understand that, based on what you just said, this allows us to operate across all of our opportunities that we have currently. Is there any guidance that you can provide on that front, or?
So I think the two factors that feed into that, obviously we don't provide, consistent with ASX guidelines, we don't provide specific guidance as to exactly what our cash positions will be. But investors and shareholders should take into consideration that we just finished a phase 1 extension study. The final payments related to that study will flow through in the current quarter. After that, our underlying cash burn rate would reduce significantly. And so historical burn rates will be are higher than what they can expect going forward. And then, as we've seen, we have access to another up to 3.7 million available to continue to extend that runway if and as required. We've also extended the repayment terms on our Victorian Government R&D tax loan advance facility. And that means that facility is now aligned with the receipt of our FY24 R&D tax rebate, which means that it will not be a drain on operational cash in the short term.
Fantastic. And we just had a clarifying question, specifically regarding the 6 cents initial investment. They just wanted to confirm, because as they said, and it is accurate, it's a very good premium.
Yeah. So the way this facility works is essentially we receive the investment up front as a prepayment for shares. Those shares are issued at the request of New Life Sciences Capital and the Muir Group over the course of the next 36 months. For the first month of the facility, the price at which shares would be issued would be calculated at 6 cents. After that, it reverts to the 90% of the 5 VWAP days chosen in the prior 20. So the point of that initial 6 cents is to provide surety and certainty to our existing shareholders that New Life Sciences Capital are not about to convert all their shares immediately at a heavy discount and sell them on the marketplace.
And there is a floor as well, as you mentioned in the.
There is a floor price on the conversion, which we deliberately set as being the price of our last financing. And so we have structured this transaction very much in a mindset of A, giving us the flexibility, B, giving our shareholders visible signs through the deal terms that the diligence we've done on New Life Sciences Capital around being a sensible and smart and strategic partner with us is actually exemplified in the contract. We looked at a number of these facilities. We understand that New Life Sciences Capital are unlikely to be an investor in the long run in the same way that the Muir Group has been. Equally, they're a partner with us to help us grow the value of the company, because that's the best way they will get a return on their investment, in the same way that's how we'll generate a return for all our existing shareholders. So we've been very careful to align interests in this contract.
Fantastic. And moving on to AD214, we've got a few questions about the timeline moving forward and the current discussions for partnering.
Yeah, so unfortunately, I'm unable to provide specific guidance around timelines for a transaction. We continue to be working towards near-term transactions, but we don't provide guidance on those. One, because the last thing I want to do is provide our counterparties with an idea that we have to do a deal by a certain time, or we have to do a deal under financial or time duress. So it's important that we do the right deal, not any deal. And for that reason, we're working very carefully through the options we have in front of us We are committed to a near-term transaction. We continue to work very hard towards that, but consistent with prior guidance, I'm not providing any specific guidelines around time or which of the structures is more likely to come to fruition at this point. I know that's on everyone's mind. For shareholder value reasons, I'm just unable to provide any more guidance on that front.
Yep. And it is worth underlining again that the current financing that we're discussing in this webinar does provide us with the flexibility to ensure that we get the best deal possible from shareholders.
It certainly makes it clear to the parties we're negotiating with that they don't need to look at our March 4C and decide they can just wait until we're under duress, because clearly we're not anymore.
Absolutely. So there was a question regarding the use of funds, and I do realize that this comes down to the specific deal that would be negotiated. But is there any discussion that you could have right now on the limitations on funds received that would be used to further AD214 development in any of the partnering scenarios?
So we've made it clear, and we continue to hold that AdAlta has taken AD214 as far as we can with our own capital, inconsistent with our strategy and business model. The expectation is that our partners will then deploy their cash and capital resources to further develop AD214 in what effectively is a non-dilutive way for our existing shareholders. Now, if we out-license AD214 completely at this point in time, then we would receive milestone payments, upfront payments, milestones, and royalties that would reflect the asset as it stands now, and would essentially lock in the value that we would have. There would be no constraints on how we would deploy the upfront payments that we might receive from that particular transaction. On the other hand, if we were to end up co-developing this asset, that will be a different structure. At that point, AdAlta retains a substantial equity component in the asset. And once we're able to execute a transaction of that type, it will become obvious what the underlying value of the AD214 asset is, which I think will be a very interesting comparison to our current market capitalization. The funds invested in the subsidiary or the joint venture vehicle obviously will need to be deployed to the development of AD214. However, the expectation would be that AdAlta is providing services to the subsidiary to deliver the actual program, and there will be we would anticipate that there will be certain other payments that flow back to AdAlta as well that will provide some at least minimum offset of working capital requirements, if not some surpluses that we can deploy elsewhere. I think there's also a question you related to that around sort of timelines for AD214 to progress through phase 2. I think the first milestone people should look for is the implied value of the asset when we are able to achieve the financing. The next steps would be the formal preparation of the drug for phase 2, which is some regulatory activity that has to be undertaken. There's some manufacturing activity that has to be undertaken to manufacture the drug. That'll take some time. We'd anticipate we would commence the phase 2 trial within 12 to 18 months of the availability of financing. We would expect to be able to de-risk the subcutaneous formulation within that 12 to 18 month timeframe as well. And the study itself would take around about 2.5 years, which is typical for phase 2 studies in idiopathic pulmonary fibrosis.
Fantastic. If there's any other questions, speak now or go on to our Investor Hub website and ask your question later. But I think that will bring us to a close. Thank you, Tim, and thank you for all the investors who have joined. Tim, do you have any final words?
Thank you for joining us again. Thank you for continuing to support AdAlta as a company. We continue to be very encouraged by the conversations we're having around AD214. If that were to change, then obviously we would be expected to announce. But we do as a board make decisions every day, every week, every month around where do we deploy our shareholder funds and where do we deploy our time and effort. And we continue to deploy that where we think there's a positive return on investment for shareholders. So I continue to be very encouraged about the conversations we're having with AD214. Our advisors continue to be encouraged around that. And then I'm super excited about the potential of our collaboration with Synthesis Bioventures. The more I talk to companies operating in this space, investors in this space, and Chinese companies themselves, the clearer it is that there is actually a need, not just an opportunity, for what we're trying to do to help migrate this incredible innovation out of Asia and into Western regulated environments. And you've only got to look at what's happening with the US, for example, with the Biosecure Act. And it's increasingly difficult for US companies to directly transact with China in particular and Asia generally. And this is just an opportunity that is sitting right in front of us that we can take advantage of that no one else can. And the fact that Synthesis Bioventures, as Andrew Wilkes described on our webinar when we announced that collaboration, they've already seen that opportunity in the small molecule space. We're just replicating that in the large molecule cellular immunotherapy space. So the future's super bright for us. We now have multiple shots on goal, and we're now financed to make sure that we can advance all of those in parallel.
Fantastic. Thank you everybody for joining, and have a great rest of your day.